Well, in the glittering world of gold prices in New Delhi are holding steady today, measured per gram. For that precise investor edge, a favorite metric amid festive buzz and global jitters. While in fact, we would be breaking down for you the exact 22 and 24 carat swings. The yellow metal remains a safe haven, and let's quickly give out the numbers to you to help you understand what am I saying and why am I saying it, and why gold has been the talk of the town. We're going to give you an understanding on the gold prices today, yesterday, a week before, a month before, and a year ago. The first, of course, a graphic played right on our screens, today versus yesterday. Well, today we're looking at 24 carat gold per gram at rupees 12,883. Yesterday it was at 12,505. We're talking about 22 carat gold, 11,810. Yesterday it was at 11,510. 18 carat gold, 9,666. Yesterday it was at 9,420. So immediately we see those numbers jumping just in a matter of one day. Let's quickly roll out the next set of numbers over here to help you understand what exactly the change has been like. So here you have it. A comparison between what the numbers were last week versus today. Today, of course, 24 carat gold at 12,883. A week ago, it was at 12,463. 22 carat gold, 11,810. A week ago at 11,416. Today, the number is at 9,666. A week before, it was at 9,374. Let's roll out the next set of numbers. A difference in the price value as per last month, the comparison. Of course, 14th November, that's today, 12,883 compared to what the numbers were looking like 1 month ago, 11,135. 22 carat gold, 11,810 today, compared to what it was last month, which was 10,200. Let's also give you an understanding on 18 carat gold, 6,666, and last month it was 8,351. So just in a matter of 1 month, you're seeing those numbers take a big shift. But let's also now break down the numbers as far as a whole year is concerned. Today, 12,883 per gram 24 carat gold, which was 7,783 rupees per gram. A big jump over there in just a matter of 1 year. 22 carat gold, 11,810 rupees today. Per gram earlier, it was 7,136. You can, of course, see a 4,000 rupee difference just over there. 9,666 for 1 gram of 18 carat gold today, which was priced at 5,825. Nearly almost doubling the numbers over there, doubling the price. Of course, we've given you an understanding on the difference in prices of gold in a matter of a day, in a matter of a week, a month, and a year. But let's now rope in a guest with us. Dr. Sharat Kohli, senior economist, joins us on the broadcast. So thank you so much for your time speaking to us on NewsX. Now, gold, like I said, is the talk of the town. Maybe perhaps also because Diwali season is here, but I've just broken down the details of how gold prices have jumped over the course of just a month. And then, of course, those numbers flashing on our screens of how it has in fact jumped in the past 1 year. What would you say? A question that's coming to everyone's mind is, should a person sell or buy gold at this point in time? What would you tell them?
Good afternoon, Sarvari. Good afternoon to the viewers of NewsX. Indeed, a very pertinent question. People are unable to decide. Someone who wants to buy doesn't know whether he should buy. Someone who wants to sell, gets in double mind whether to sell or not. Well, of late, the numbers you were reading, if you look at the last week or so or last 15 days, the U.S. shutdown has contributed a lot. We've seen the shutdown is now getting extended every day. That is leading to a lot of economic uncertainty in the world's largest economy, which is having a cascading and a rippling effect across the world. Our economy's federal government is in lockdown, or a substantial part of it is in lockdown. add to this weakening of the US dollar versus rest of the currencies. I'm talking of the Swiss franc, I'm talking of the euro, I'm talking of Japanese yen and British pound. Against all these currencies, the British US dollar has fallen down vis-a-vis Indian currency. So I think the geo-economic, and let's not forget the geopolitical factors. You know, the tensions across the Russia-NATO border, the Europe-Russia border are at its peak. There's a lot of troop deployment there. In fact, in Sweden, I heard the government has advised its citizens to store food, which means that they are anticipating some kind of a conflict, so which can lead to World War III, and they are nuclear-loaded countries, so that fear is also there. Coupled with this is relentless buying by the central governments around the world, and a lot of money coming into by way of ETFs. Last month, 29,000 crores was put in mutual fund. Out of that, more than 8,000 crores is in ETFs. So I think ETFs is also propelling the demand, because for ETFs, they have to buy, AMC has to buy corresponding metal. You cannot just remain on digital. You have to back it by way of hard form gold or silver. So I think that people are also, larger investors are pulling out some market money from stock markets and pumping into the gold and silver. So all combined together, Savary, it is sort of multiplying the demand and propelling the demand to the next level, which is why you're seeing this phenomenal rise. Advice to the investors is that if you got gold for purpose, you can book profit for a certain extent. I would say about 50% of your holdings can be in investment. We have a rule which is called profit in the bank is better than profit in the books. So you should maybe book profit for part of your holding. For rest, you can continue to hold. People who want to enter the market, they can enter in smaller quantities. Every time there is a correction there, you can buy in smaller quantities over a period of time. And my advice is that stay invested for long term. Don't look for short term, mid term profits. Even if you get those profits, you should keep them for a longer time, Asaf.